start with RCL Foods. And we talk about this stock in both the food sector as well as here with the chicken companies, because Rainbow is the market leader. Remgro moved in and took control of Rainbow back when Stan Methven and his family passed that on. Then it merges with Food Corp. Remember, General Mills, those guys. And it renames itself RCL, and since then has done a number of different deals as well. It incorporated, for example, the Transvaal Sugar Beperk, which is TSB, which just got sugar interests down in Swaziland and so on and so forth. It remains controlled by the Remgro Group. In fact, now Remgro's stake in it is even much higher because of the injection of the TSB business. It's a sizable operation, market cap 16 billion rand. The problem is that no one really knows what its sustainable earnings per share level is, because there's been so much reorganization, restructuring, paying off of debt, transferring of assets, moving around of holding companies and structures, that it's not got a PE that you can calculate. We'll have to wait and see. The dividend yield is about 1.1%, but that's based on them having paid an interim dividend or a dividend in their last reporting period, which was so full of restructuring and reorganization charges, you couldn't work out what the hell was going on. Yeah. So we'll look at the share price in a minute, Gary, but I mean, it sounds like it's got interesting assets down there, but tricky one to value. Huh?
Very, very difficult to value. It's not just that they've been on a huge acquisition spree and bought and a lot of new businesses into the group. They're also now taking those businesses and restructuring them. So the old Rainbow chickens that we used to look at now, I mean, their animal feed business is going to be spun off into their, I think it's sugars and milling division, right. And then your actual sort of poultry business is going to stay in a new business called the consumer business. So it's a very difficult one to value at the moment. And I mean, they did, in their last set of numbers, I mean, they pointed out that, the Rainbow operations were struggling a little bit, which was a little bit of out of character compared to what the rest of the businesses we're going to look at. But overall, a very different business to the other four businesses that we're going to look at, because it's got sugar, it's got all the staple goods. I mean, they cover everything from staple goods all the way up to high end of the spectrum foods. So it's a very, very diversified and very different to what we're going to look at in the other chicken producers.
Okay, well, look, let's just focus on the chicken part for a while. So, I mean, because they're the market leader, you'd expect them to do especially well. They'll have contracts with, regional operations within KFC, with Nando's, with Steers, all of those sort of people. They've got their own brands like Farmer Brown and so on that they sell directly into the retail environment. So why, do you think it was just a timing issue? I mean, it seems like the overall conditions benefiting the industry you described earlier should also help these guys, huh?
Definitely. I think it was a timing issue, because I think in those numbers also we were still, like I said, this is a fairly new change in the poultry sector. So I think you're going to see that filtering in, you've got to see it filtering in later results. But also, I mean, again, there were all these sort of one-off items. So, I mean, they had it was a R1 billion, impairment, but due to the financing of the deals. So, and they're also, I think they're doing 2 BE structures at the moment, as also, like you say, incredibly difficult to value and actually see what's going on.
But all those general trends, like also the lowering of feed input prices, that's going to be favorable for their dog food and bobtail and all Dogmore business that they got along the way. It's going to be beneficial for all of those other businesses like the mayonnaise operation and the peanut butter operation, Yum Yum, that's in Food Corp. And sugar, I mean, hang on, let's just be careful here. Sugar, that's a tricky environment right now.
That's it, no, definitely. I mean, they've taken a stake in a Mozambican sugar producer, but again, with falling commodity prices comes, falling sugar prices as well. The sugar prices are still very, very low. So, perhaps going to struggle there. But like you say, I mean, if we just go back to the chickens for a second, also I think you need to discuss with chickens, I mean, that sort of, it's a very low margin business. So the low margin, high volume players do definitely have an advantage here. I mean, compared to someone like a Sovereign, which we're going to look at a bit later, that it's really focused on more of the niche products to try and just improve that margin slightly.
Okay, but this is tricky. It's a 16 billion rand market cap company. We'd like to be a bit better informed about what to say about it. We'd like to know whether it's hot or not. Generally, I like food businesses. I know this one's tricky. I'm not keen on sugar. What are we going to do, hot or not?
Like I said, I'd like to see how they bed down that restructuring at the moment before I go in. Let's get a couple of good sets of results under the belt, and then we can look at to
So definitely one to watch, but I agree with you.
For now, not
hot, just on account of not really knowing whether it's trading at the appropriate level.